Hey everyone, a quick update today on China and Japan. First up, China. So inflation in China saw a pop in February, coming in positive after 4 straight months of deflation. Food inflation was a big concern earlier, but this time around we saw improvements in food inflation coming in 2.9% higher year-on-year from a negative 12.7% year-on-year. The other big reason was services spending. So services prices rose due to the Lunar New Year, and this drove prices higher. On the other hand, however, we saw PPI, which is producer prices, come in further negative. Now this matters because producer prices is what feeds into CPI inflation. So basically, at the production level, we are still seeing deflation or negative inflation. So this could signal that this pop in inflation might be temporary. Now the question is, how temporary? NBS commented that the producer prices in the upstream sector, such as metals and cement, fell on weak demand due to paused construction projects because of the Lunar New Year holiday period. Stocks, however, saw this as a positive, including the Hang Seng Index, and have been on a rise since morning. All in all, this is good news for China, but it still needs to be sustainable, and we need to see inflation remain positive and grow for there to be a positive impact on economic growth. Next up, we have Japan. Now, in a previous video, I had talked about how Japan had slipped into recession. That was an early reading of the GDP numbers that came out negative. It had come out at negative 0.1% quarter on quarter. And that was for the fourth quarter of 2023. Now, the third quarter of 2023 also came out negative at 0.8%. And so 2 back-to-back quarters of negative GDP growth usually signifies a recession. However, today we received the final numbers, which were actually positive. So now we can say Japan has avoided a recession, and this brings out other policy implications by the Bank of Japan. So this could confirm a change to the negative interest rate policy, something that will be decided next week in a meeting from the Bank of Japan. The initial reaction was a rise in yields and a decline in equities, as traders placed even more bets on a change in policy this month. The nuance here, though, is looking underneath the hood. Now, the big change came from quarterly capital expenditures. So this has more to do with business spending, which came in positive versus the third quarter's negative number. However, when we look at private consumption growth, which is people spending on a day-to-day basis, that remained unchanged at a negative 0.3%. And this is the number that the Bank of Japan looks at, because what they want is a boost in consumption so that inflation remains entrenched and doesn't turn back to deflation once they start hiking. So just to take a step back and explain things here, Japan has been fighting deflation for the last 2 to 3 decades, right? And right now, the Bank of Japan wants a situation where inflation remains positive in the country, because a little bit of inflation is always healthy for a country. Deflation is not healthy for a country. So what happens when the Bank of Japan starts hiking? Once the Bank of Japan starts hiking, this will put pressure on prices and therefore may push prices down so far that it turns back into deflation. Now, this is definitely something that the Bank of Japan wants to avoid. And so this month's meeting is going to be very tricky and one to watch out for. In our opinion, the Bank of Japan may not make a change to policy. However, we would be careful about keeping positions in equities or the Japanese yen here, because things could turn very volatile at this meeting. Even if they make an announcement that there will be a policy change in the next few meetings, so they don't make a change, but they announce a coming change, That may also cause equities and the Japanese yen to move more than expected. We therefore suggest that people remain cautious and practice good risk management here and take some profits off the table if you are in Japanese equities. Thank you for listening today.